Hey everybody, it's Pete. Good morning. It is Friday morning, October 23rd, 2020. End of the week, debates out of the way. I guess now it's just left up to us to go and vote when the time comes. So hopefully once this gets out of the way, we can start to get back to a little bit normal where price action is actually what matters and we're all not waiting on headlines from Washington. I do hope they pass the stimulus bill. The move that we had from March through the end of August was just amazing. It was actually much easier trading. But here's the thing, and this is what separates somebody who is ready to take their trading to the next level from somebody who is just waiting for it to be easy. Look, of course, we all want it to be easy, but what if it's not? What if it's not just going up every day, every day, every day, and the market just keeps bidding and holding every trade that you have? What if it's not? What is your plan for if that doesn't happen? Are you ready to step up to the plate and say, regardless of what the market throws at me, I'm going to be prepared because I know what I'm looking at? That's what you should be saying to yourself right now. If we get the other market where the stimulus does get passed and it's meaningful and it matters, sure, we'll be all over that. But I'm looking at you right now and I want to say, are you ready if that does not happen? Because that's normal markets. Are you ready to be looking at stuff on the long side of the market, the short side of the market, understanding relative strength, relative weakness, and more importantly, taking full responsibility for how much money you make? That's what I hope for you. I hope that you can say, no matter what the market throws at me, I'm ready to make money. If you need some help with that, if you haven't heard, we've opened up a new community that's absolutely free. All you need to do is click down below, watch a 90-second video, and then click to join. So if you need some help, if you're not achieving what you want to right now, it's not the boot camp. It's a free community where we can all discuss some ideas. But if you need some help, definitely click down and learn what's going on there. It's brand new. We're just getting it off the ground, but pretty excited about it. I want to start off today talking about a trade that did not happen, but set up. It's very important to understand having a trade signal, having a trade setup that leads to a signal still needs for the signal to fire. You can't get involved in a trade too early or way too late because you wait for too much confirmation just because you like the stock, just because you think it was an idea. We talked about it a little bit yesterday where if this is the trade and you feel like this is the entry and this is the reward potential, that's where it makes sense. You have acceptable risk and desired reward potential. This is where the trade makes sense. If the trade now rallies for 3 days, you just decreased your reward potential in half of what the stock would normally do if you're trading in the window that most swing traders trade, which is that 3 to 10 day window. So if you have acceptable risk reward and then it spikes up for 2-3 days and now you're like, oh, now I got to get in, I can't miss it at this point. What you're doing is you're decreasing the reward potential to now be a one-to-one trade, which makes you a break-even trader. So we really need to work on how to get to the point where you're not chasing price, you're anticipating the best entries. So that kind of ties into a trade that I want to discuss. Let's actually head right over to the screen. I'm a little discombobulated this morning. And we're going to take a look at a trade in Big C. And we're going to zoom over to the daily chart. And what we were watching for a while here was this rally off the lows, and it was very, very persistent. We said, oh gosh, just give us a good spot to get into the trade, pull back, and we'll bid for the stock. Now, here's the actual setup. This is actually one of my favorite setups where you get a pullback and what's known as an inside candlestick. And the trade on this is when it starts to move back in the direction of the most recent price action, that's where you enter. But here's the key. The stock never did that. It opened up the previous day and just started trading down. It did not start trading in that direction. So the trade never happened. You're not in a losing trade. The trade did not trigger. That's what I want to get across to you. It seems like a lot of people who are in the boot camp, newer traders looking for that little extra edge, are missing the anticipation of the entries. They're working hard. They want to get into trades, but they're not being patient enough to wait for the actual best spot to get into the trade. So I thought it was kind of cool to start out with, kind of like a mini lesson this morning that when you have your trade, your setup, and you decide what you want to do, it's crucial that you have the discipline to make sure that the trade fires to give you the proper reward potential in exchange for the risk that you have to trade. So it's kind of a good lesson here of a trade that set up but did not fire. The trade of the day today, the idea of the day that I want to talk about is Caterpillar. Caterpillar, you can see here, if we go all the way back in the history of the stock, it's actually right at all-time highs right now. But the exciting part for me about the setup, and the reason I brought up Big C before this is because it's very important. You can see Caterpillar now had a bullish gap, and now it's paused for 1, 2, 3, 4, 5 days right at or near those all-time highs. So again, we have a potential setup here in Caterpillar. It still needs to fire the entry to get us into the trade. So we need to get out of this trading range for the trade to get us into it. And the proper risk on this trade is down here. Now, we do have what we just said in Big C. It's actually another inside candlestick, which sets up a really nice risk profile on the trade because it's very easy to determine where you should be getting out. But this is a little different scenario because we have a channel now. We have what's a trading range. So really the proper stop loss is below the trading range, which is below 166. Now the entry would normally be right around here at 170, but because we got there and failed, got there and failed, got there and failed, got there and failed in a big way, and now we're opening up again, we want to have a little bit higher level than that. We want to be outside of the noise. So what I'm looking for today is I'm looking for a 171 entry into this stock with a 166 stop loss. Now that's a little bit of a wide stop loss, but that's the proper stop loss for this trade. So within this stop loss, that means that now we need to have a projected target of where the stock could potentially go. And as you know, we usually look to the left to set up what does the stock normally do. And the most recent previous move in Caterpillar was 144 to essentially 164. So that's a $20 move. So we're essentially looking to risk $5 to make 20. I'll take that. That's not a bad trade. And the fact that we're heading into all-time highs, that's fine too. So now this is the tricky part here where a lot of people get kind of angry at breakouts that they don't follow through. You only need one good breakout to follow through to really give you a super trade for the week. All you need is one breakout trade as long as you're disciplined on the ones that don't follow through. Now, because this stock keeps failing up in this area at 171, your initial entry should not be full share size. You need to work the order a little bit because we got up here and failed. We got up here and failed, and we are at all-time high resistance. So we need to clear through that level. So the trade that we're taking above that level that we just gave should not be your full share size. And this is a place where a lot of good, smart, hardworking traders miss the boat, where they get in there and they're like, gosh, here it goes, I want to get involved. And they load up imagining how much money they're going to make. And it's not proper money management, which is a big part of a trading plan. So even if this stock does not follow through, we're not going to get hurt because we don't have full share size. If it does, and it moves a certain distance in our favor, then we will add to the position and have what we might call a worst case scenario break-even trade, which is the best case scenario. So I just wanted to outline the entire trade there before we got into some positions. American Express is actually reporting earnings, scheduled to report earnings after the close. Got to be very careful. We use that word scheduled. Financial stocks have perked up a little bit. They were really trading well yesterday with the rest of the market, but it's been interesting to see. We're starting to see some larger green candles here. Now, it doesn't mean we're out of the woods yet. You can clearly see here JP Morgan has not been able to get through 104. It looks like we're going to open up and punch through there on the open, higher open and push through. So it's going to be interesting to see if JP Morgan goes well bid through that level. The trade of the day that we had yesterday, which was called out by Matt in our community, and this is interesting because we had a lot of traders say stocks are too expensive. Yesterday it was a $28 stock, and it actually went up 7.68%. So a $2 rally yesterday off of one of our favorite trading setups. So really, it's being a better stock picker that really gives you these kind of ideas. So kudos to Matt yesterday calling out for the entire boot camp, and we had a really nice trade in this yesterday. And again, now this stock has traveled this distance, which is $12 in 5 days. So now is not the time to initiate a new trade. If you do, and it's a swing trade, it has to be with lower share size, because remember what we just said about the risk profile and profit potential. But really nice job yesterday, Matt. I'm impressed. But a trade that is setting up that's kind of in that same universe is Discover Financial. So you can see we actually closed at the breakout level again. We do have a little bit of resistance in the next few levels, but they're a decent amount away where you could start building a position. So what we want to see here now, because we keep getting up to this level, which is basically 65 and failing, we need to see it take out yesterday's high for the proper entry into this trade. And then 76 would be the the first target. Other trades on the board today, we have EXPE, really good explosion yesterday. Now, again, you can see this is trading up into resistance, but the next level is 120. So we do have some room to go. So again, very similar to some of the trades that we're looking at. We're not in the August market anymore. Now you need to look to be building the positions. This would be a first piece over 104 for your initial entry. HLT, very similar, and these get out of the house kind of stocks. You can see, again, we're looking for stocks moving in our direction, but that's not the only part of the trade. And again, this is where some help is needed. There needs to be reward potential as well. And in this case here, you can see clearly 112 is the next level. So again, we're looking for a close, in this case, over 95. We're looking for the trade to get above 95. We're just going to rattle off a few more that have some potential. DHR, first day. If you missed yesterday's trade, we're looking for a punch through yesterday's high. Medtronics is another one. Again, look, we're seeing some trades clearing levels. If you feel like you need some help with your stock picking, definitely let us know. Get into the boot camp. This is stuff that we work on every single day because, look, finding stocks and making money is not the same thing either. So you really need to fine tune your entries into these ideas where it makes sense for how to build a position, when to build a position, when it's too late to enter the trade, and how to maximize your profits. AEP is another one. Really nice follow through here as well. And again, you can see there's some room to go. CAR is an interesting one. CAR is one that I am not looking to enter today. This is one that I'm going to be putting into my watch list after this rally up, took out resistance, and now is up a certain amount of days, which again, we talk about this in the boot camp, but just for the sake of this, for this video, I want to wait for this stock to pause after this move to the upside so I can manage my downside and then enter a new trade. So this is going into the watch list. Next, we have BEKE, which had a really nice explosion yesterday out of what we know as a well-bid candlestick, set up really cleanly there for a new move. It's going to open up lower this morning. I am still looking to be long this stock. If you happen to be long yesterday, you know what your stop loss is, but I'm still looking to be long this stock today. A couple of stocks that pulled back that are giving us some nice profit potential now. PayPal obviously had the big cryptocurrency story yesterday, so it actually broke out. The biggest thing you don't want to see on a breakout is a stock to go well offered. You want to see it go well bid and follow through, but that's fine. We could look to bid for the stock today, and yesterday's low would be the stop loss, looking for a new run higher. FedEx also looks really good too. Now, nice two well bid offer, two stocks that it's Friday. Closing near the lows, looking for a spot to bid for this now at or near yesterday's low. And last but not least, we're going to finish up with Target, very similar, coming off of all-time highs, pulling back, giving us a new risk profile and a chance to bounce back through 167.50 into all-time highs. So we didn't really talk about what the market's doing right now. After the debate, we're kind of just floating up or down around neutral. So this really means that the catalyst that we've been looking for is not there, which really means that you need to, number one, dial in your watch list. So have a really tight, focused list of stocks you plan on trading today and into next week if you're holding swing trades. Just as importantly, don't veer off of that list. The traders in the boot camp who are seeing the most consistency, the most reliable profits on a day in and day out basis, and let's even expand that a little bit, the most reliable account growth from week to week. They're being patient when the market's not obvious, and then when it is, executing with the conviction of somebody who's a professional, not because you're doing it full time, but because you know what you're doing and you know what you're looking for. And that's an important part. So we actually had a trade yesterday in one of the stocks that we've been trading every day, one that Jeff May is actually kind of leading the path on there. It wasn't a good trade. It wasn't a good trade. It wasn't a good trade. And then it met certain criteria, and then it was a 2-hour trade. And again, for those of you that swing trade, that might not seem like a lot of time, but for a day trader, when you have leverage, and even if you don't, you can catch $3 in 2 hours, and that makes you weak if you wait for the right time. So there's a lot to unfold as a trader, and it really comes down to putting the pieces together. And if you need help with that, definitely let me know, and I'd love to see you in the boot camp. If not, definitely click down and learn more about the new community that we have. I'd love to see you in there too. Have a great day, have a safe day, and have a great weekend.